The IMF that lends billions worldwide, but where does it get the money from? The shocking truth. An institution that has no factory, no oil field, no tech company, yet somehow it lends billions of dollars to some of the world's poorest and most crisis-ridden nations. Pakistan, Sri Lanka, Egypt, Ukraine, Argentina. Whenever any of these countries teetered on the brink of bankruptcy, one name emerged first: the IMF, International Monetary Fund. But the real question is, where does the IMF get all this money from? Is it America's private bank? Is it a secret vault owned by the world's richest nations? And most importantly, is this money being used to control global politics? Today, we'll uncover the hidden truths of this mysterious global fund, truths that many have heard of, but few truly understand. But before we begin, if you are new to our channel, don't forget to subscribe so you get all our latest updates first. So without further delay, let's begin today's deep dive into one of the world's most powerful financial institutions. IMF is currently making headlines in India because it recently approved a new $1 billion loan to Pakistan at a time when India was carrying out its counter-terror surgical mission, Operation Sindoor. From Indian citizens to policymakers, everyone is asking the same question: why is the IMF supporting a country that continues to harbor terrorism? And more importantly, is the opinion of responsible countries like India being ignored? But before we dive into these questions, we need to understand how the IMF actually works and where its funding comes from. The International Monetary Fund, IMF, was established in 1944 as World War II neared its end. In Bretton Woods, USA, representatives from 44 countries came together to lay its foundation. The objective was to stabilize the global economy, prevent currency crises, and provide immediate assistance to any country on the verge of bankruptcy. But at that time, the IMF had no money of its own. Its funds came from member countries, contributed in the form of quotas. The IMF receives its funding from three main sources. The first and most significant, member quotas. These are like membership fees, but the amount depends on the size of a country's economy. The larger your GDP, the bigger your quota, and the more voting power you hold within the IMF. The United States holds the largest quota, about 17.4%, while India's quota is around 2.75%. These quotas don't just define your contribution, they determine your influence in IMF decision-making. The second source is income from interest. When the IMF gives a loan to a country, it charges interest on it. And this interest makes up a large portion of the IMF's income. This means the IMF is not a non-profit organization. It earns money in exchange for loans and uses that money to help other countries. It functions much like a bank, but on a global scale. The third major source is NAB and BBA, i.e., new arrangements to borrow and bilateral borrowing agreements. When the IMF falls short of funds in a particular situation, it borrows money from other wealthy member countries. In NAB, it borrows from multiple countries at once, while in BBA, it borrows from a single country under a formal agreement. India has not taken any loan from the IMF since 1993, but it has lent money to the IMF on several occasions. This means India is now no longer a borrower, but a lending country. The IMF is not just an institution, it has become a significant tool of global diplomacy. It not only provides aid, but also places conditions in return. That's why IMF loans are called conditional loans. It offers three main types of loan programs: Rapid Financing Arrangement, RFA, Extended Fund Facility, EFF, and Standby Arrangement, SBA. All of these programs are designed according to the specific needs of different countries. Rapid Financing Arrangement is mostly provided in situations where a country needs emergency funding immediately, such as during war, a pandemic, or a natural disaster. The conditions for this type of loan are relatively lenient, but the amount sanctioned is limited. Extended fund facility is given when a country needs to make long-term improvements to its economy, such as reducing deficits, implementing tax reforms, or enforcing fiscal discipline. This comes with long-term conditions, and often, the country has to cut down on government spending. Standby arrangement is granted when a country's economy hasn't yet collapsed but is at risk of doing so. It acts like a backup loan, which the country can choose to use or not. Today, the biggest borrowers from the IMF include Argentina, Ukraine, Egypt, and Pakistan. In particular, Argentina has taken the most loans from the IMF over the past 2 decades. Repeated borrowing, frequent defaults, and rising political instability have made Argentina a high-risk country in the eyes of the IMF. As for Pakistan, it is an old borrower of the IMF, but also one of the least trustworthy. The recent $1 billion loan given to Pakistan has provided temporary relief, but this is merely a short-term patch, not a long-term solution. Now the big question is, does the IMF operate under a political agenda? Is it not setting a dangerous precedent by repeatedly helping countries like Pakistan? The IMF often claims that it makes decisions purely based on economic indicators and needs, but global experts believe its policies are influenced by the United States and Western powers. The IMF's headquarters is in Washington, D.C., and among its board of directors, the U.S. holds the most influence. If the U.S. considers a country strategically important, IMF assistance tends to arrive quickly, and this is exactly the kind of concern raised in Pakistan's case. Countries like India, which contribute significantly to the IMF but don't have proportionate influence over its policies, are now questioning the institution's transparency. Shouldn't India demand a greater role in decision-making and an increase in its voting power within the IMF? Because when countries like India are engaged in a decisive fight against terrorism, while terror-supporting nations like Pakistan receive assistance from the IMF, it's not just a policy failure, it's also a moral contradiction. But there is another side to this as well. The IMF is not just a lending institution, it also advises countries on economic reforms. However, many times, the conditions it imposes are so strict that they directly affect the common people. Electricity prices go up, taxes increase, and subsidies are removed. That's why many countries consider taking an IMF loan only as a last resort. Nations like Pakistan, Sri Lanka, and Lebanon agree to IMF conditions, but often fail to implement them effectively. This leads them back to the brink of bankruptcy again and again.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources: news from various news agencies, opinion polls, and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.